Okay, let's hop right into this. It's been way too long. Alright, so a lot going on in crypto, lots of crazy stuff, and I'm gonna help you make sense of all of it because for the first time ever, Bitcoin bears were right. They weren't right, but they made a guess, and the market ended up crashing. So there's a lot of confusion right now on what's going on in the markets. So first off, let's see how you can play Bitcoin, because that's really, you have to understand Bitcoin if you want to understand the rest of the crypto market. If you want to make money in NFTs, leverage trading, whatever, you have to understand that Bitcoin's the lead indicator. And the lead indicator of Bitcoin is going to be the stock market, and we'll get to that later. But so these are the exact levels that I'm looking at right now and how I'm playing this. So in my last video I was talking about how I had a long position open. I have no idea how it didn't get liquidated. The liquidation target is perfectly at, and this is how you're gonna make money in crypto, is freaking, this is exactly what I'm doing. So we zoom the chart out, you have all this consolidation right here. Let's see. Jeez. There we go. So you have all this consolidation right here. Let's see, it's a 4-hour time frame. This is consolidation's been crazy. Alright, let's go to daily. It's insane. Alright. The heck. Okay. So right here, you want to be playing your levels. So this is exactly what I mean by that. No BS. Freaking, the way that I'm playing this market exactly is, as long as we stay above 46,000, this area right here, this wick right here, as long as we stay above this level right here, Bitcoin's bullish, and you can see that right there. And as long as we go below this level, we're probably going to be heading lower. And this is really what you need to know. Let's see, let's get some long positions open so I can show you exactly what I'm talking about. So right here, what I have, this is like exactly how I'm playing the market. I have a stop loss right at freaking 46,000. So if the market goes any lower than 46, I want to close all my long positions open. If I'm using leverage, any risky positions that I have open, I'm going to be closing at 46,000, because if we go lower than 46,000, then we're going to be setting a lower low on, this is the 4-hour, but it doesn't really matter. Any of the smaller time frames, we're going to be setting a local low, and this consolidation pattern is going to favor the downside. Right here, you have what could be what is it called, double top formation. No matter how you play it, it's very risky to have anything open at 46. And so if the market right here is kind of a dead zone right here, if you go to 46,000, I'm expecting the price to go to 40. So I'm not going to be playing this market. If it goes to 46, there could be potentially a wick. The price could come down and wick, but this is basically no man's land right here. Is the best way to play it, because you're relying on a wick when the fundamentals are against you, and that's just like how the Bitcoin bears like to play, I guess. It's not a good decision. It's not a good decision to short Bitcoin, and the Bitcoin bears are learning. What's this measured move? Yeah, 10%. They got wrecked. They had one right call and they're freaking out. Yeah, well, they're liquidated now, which all is right in the world. They literally had one right call, and now everybody in crypto is confused, because it's like, do we listen to these guys? They made the right call against everybody else. Well, nobody was expecting some new guy, some new whale to dump the price and have a cascading effect of liquidations. Nobody was expecting that. And if they said that they were expecting that, they're lying, because nobody in the market was predicting that. But let's get into this. Trying to look for that parallel channel. And so the way that you want to play this market, the way that you want to look at it, is essentially right here. This is what I'm doing. I'm longing right here, because the risk to reward is like insane. Obviously, you can't open a position at 46,000, but the buying potential is insane. If we go even close to back to all-time highs, obviously you have exponential gains. You know, was that 36% return? That's not even all-time highs. So obviously, longing it, not a terrible idea, but closing longs at 46,000, not a bad idea either at all. That's probably how you should be playing this market. That's definitely what I'm doing. And then a rough idea of no man's land is probably right here down to around 42. So if the price action does come down, I'm not going to really be doing anything. I'm not going to be selling, and I'm definitely not going to be buying, because you have this lower low right here. And what that means is that you have this entire consolidation pattern and all this buying momentum basically shifting way, giving you the potential to continue to go lower. Why would you, if you're already in the market right here, why would you risk, this is a very small, let's bring the stop loss down. Stop loss does not want to come down. It just likes being where it is. I mean, that's not a bad stop loss at all. It's a nice risk to reward ratio. But you're risking a 10% move right here. It doesn't make any sense when you could be potentially, this is exactly how I see the market. Right here is where I have my long position and my liquidation level right here. This is basically no man's land. It could wick right here, but it's most likely going to go down. If it does come down, it's most likely going to come down to around that $40,000 $40,000 to $30,000 range. That's potentially where I'm looking to buy. And if it does come down to that level, and again, this is the no man's land, because really you're just hoping that it wicks. And you should never hope for anything in an investment or in a trade. So it makes absolutely no sense to be getting involved with the market if this level doesn't hold. Now, price has already showed that it can wick any of these levels. So, I mean, if you wanted to even be more aggressive, in the smaller time frames, you're looking at 47,138. So I mean, even if it hits that's potentially where the market becomes extremely risky. Could it wick there? Yeah, there's a small chance it wicks there, which is why my liquidation is at 46. But it doesn't make sense to get involved with the market here. So this is what I'm looking at. I'm looking at potentially, if it gets into here, I don't want to mess with it. Most likely price is going to continue to drop. If it doesn't, I mean, what I'm doing right now is I'm holding a massive amount of Cardano. I think that's an incredible move. I have my Cardano staked with a staking pool that's going to be earning me Sunday swaps. So freaking Crypto Capital Ventures has a staking pool where you ticker symbol Charlie Victor 4. So CCV4. And with their staking pool, you can essentially earn Sunday swap on top of your Cardano rewards. So I have a ton of Cardano. I have tens of thousands of dollars in Cardano. That's all staked, and that's all going to be earning me rewards, not only in dividends from Cardano, which is a smart move, because right now, is crypto done? No, really what everybody's been talking about, and I was the first one to say that Bitcoin was going to go to 100,000. Well, not the first one. I was one of the first ones on the internet to say that Bitcoin was going to go to 100,000 this year. It looks like, because of this crazy wick right here, it looks like that might not be playing out. Probably not going to be playing out. So a little bit bummed. Said 100,000 the entire year. A lot of people said 200, 300, whatever, and then they revised their. I'm not revising it, but I mean, it seems, 84 seems more likely right now, but it doesn't look like it's going to be playing out regardless. What it looks like is that we're entering into lengthening cycles, which I don't really want to talk about right now. What I want to talk about is how I'm playing this market. So I don't really care if you wanted to get whatever. If this sets a higher high, then potentially that's obviously bullish. But until it breaks around 63,000 to 55,000, I don't really see this market in a full-fledged recovery. At that point, when you look at the Fibonacci levels, because that's really what you want to do, is you want to look at, where is it? Fibonacci extension. To analyze this, you take the top to the bottom. And then you mark it like that. And it looks like we're recovering very nicely, especially if this 4-hour candlestick closes. It's right at that 0.5 level. So it's recovering nicely. It's already been out of this 0.618 Fibonacci level, which is huge. That's why you see a massive recovery right there. That's why you see support tested right here. And then obviously it doesn't look like we found resistance here yet, but if we break this area right here, it's game over. You can say that this isn't really a downtrend anymore. Fibonacci retracement is actually what we do to figure out if it's in a downtrend. Now textbook, when you look at it textbook, obviously there's lows and there's obviously higher lows and there's highs and there's higher highs. So textbook, we're in an uptrend, but on the Fibonacci level and actually measuring the strength of the uptrend, it's not there yet. We haven't fully recovered out of this wick yet. So what I'm looking for is the 53,000 to 55,000, because let's put up the EMA support ribbon or resistance ribbon. Alright, so if you go back and you analyze the Bitcoin price for the last few days on the daily chart, you can see that before we actually had this massive wick down, we had constant resistance at this goal. What is this? EMA ribbon, exponential moving average ribbon, which basically all these moving averages are extremely important. They're exponential moving averages, which are used for trading. They're all important, and basically what this indicator does is it lines all of them up, because it's impossible to figure out all of them on the graph at one time unless you have this ribbon. So we constantly hit this ribbon as resistance. So until we break above this ribbon, and really what we want to do is, this is the most important one, the white one. It's the 20 EMA or 21 EMA. And so like I said, if we don't break above that, if we don't break above 55,000, then this price action continues to be bearish, because even if we do continue in this uptrend, we're still in a longer term downtrend, and that downtrend doesn't get broken. It looks like it's broken. It looks like it is a trend line that's holding this down, but you can clearly see when the EMA ribbons are down, that are up, you can clearly see that that's what's holding the price down. And so even though you have this wick and everybody's concerned about this wick because nobody really knows what's going on, the fact is that we were constantly held down by selling pressure by this downtrend. So we need to break above this EMA ribbon, which is at 55,000. All right, so very easy way of looking at this. Essentially, no man's land. This is all fair game right here. Like I said, I have a long position opened. It gets closed if we set a lower low. That makes sense. And then where I would continue to be DCA, which is dollar cost averaging, if you wanted to continue in this market, I'm already so heavily exposed that I'm just going to let my capital ride. And my strategy is, I have my XRP, which is one of my big holdings, on a Nexus wallet. So that's what is it? Nexus. It's NEXO. So Nexus. It's earning 5% annualized returns. I have quite a bit of capital in it, so it actually pays out pretty well. And they do that every day. They pay out every day, which is pretty good. So I'm having my XRP sit. I'm having my Cardano sit. Those are my two biggest holdings. And my Bitcoin long, if you want to know how I'm making money, like no BS, this is what I'm doing. I'm making money right now staking my Cardano. I think that's an incredible decision, because no matter what happens, I don't want to sell my Cardano, because there is a possibility we wick here. It doesn't make sense to go into a position either way. And right here, this is no man's land, because all we have is consolidation. Price has obviously shown that it could go up. Price has obviously shown that it can go down. So it doesn't make sense to really do anything besides have potentially a long with a liquidation point right here. And then right here, I'm already so exposed to the crypto market. I don't want to expose myself even more. So what I'm doing is, if price goes up, I'm going to continue to hold. Price goes down, my leveraged long gets liquidated and a massive amount of my buying power leaves the market until that $40,000 range to $30,000 where I would be potentially buying. So that's really what I'm doing right now in the markets, and that's the best way to approach it. The worst thing you could do is try and figure out this little consolidation pattern, because right here we had a double top potentially play out and it didn't play out, and right here we had an double bottom play out and it didn't play out. See, if you measure, let's measure the double top first. So double top would be from this to this neckline, measure it with the stick. Clearly it did not play out. Now that's bullish, relatively bullish. But then also what you have is this double bottom pattern. And if you measure the double bottom, that obviously also hasn't played out. Now, could it play out? Yeah, it could play out. But it doesn't make sense because there's so much emotion in this market right now, and there's so much uncertainty in this market. The real thing that's going to cause this market to go up or down, and it's been tested time and time again, is the stock market. The stock market's correlation is extremely high to cryptocurrency as a lead indicator for the market. So what that means is that if the stock market does well tomorrow, we're going to continue to see Bitcoin making new local highs. If the stock market doesn't do well tomorrow, we're probably going to be testing this bottom level and potentially entering into this area that is not a good area to get involved with. Because yeah, you could buy the dip, but it doesn't make sense. It doesn't make sense to buy the dip right here. You'd want to buy the dip like right here if you were going to. Or maybe right here, but right here it doesn't make any sense. And you'd cost base average in as this is a low, and then you would continue. But right here, there's such a massive risk that if we continue to go down, we're just going to go down even further. So to mitigate that risk, the area doesn't make any sense to play with. And so that's Bitcoin. You have to understand Bitcoin before you get involved with the rest of the market. Let's see. Alright, so this is XRP right now. My long position on XRP is doing pretty well. So let me explain this gorgeous chart right here. And I could say the same thing about Cardano, and I'm sure that this is blowing a lot of people's mind right now. What am I saying? Because this is the most underrated cryptocurrency right now. Super suppressed. Lots of use cases, lots of airdrops. It doesn't make sense why this why I would say that there's so much money to be made here. But let's take a look at the daily chart. So there's a lot to learn. So first thing off is that if we continue to recover and set all-time highs, we're probably going to go back to $1.35. I'm not a wizard. When we were at all-time highs, we hit $1.35. So backtracking history, backtracking the market, that's probably where we're going to be heading towards. Okay, and that's very close to setting a local high and potentially creating some giant double bottom pattern, which could be extremely bullish. Now let's say we head down to 40,000. We're probably going to go to around 58 cents to probably around 50 cents. I'm not a wizard, but when Bitcoin crashed down to 41,000, we saw exactly what was going to happen. So right now, you basically got a reset on the entire market. You basically have the upside potential of every single coin and the downside potential. So you can literally plan out your entire strategy for how you want to play this. You know exactly where to buy if the market goes down to 40,000. You know exactly what your upside potential is if Bitcoin continues to go up. And you could do this with any coin. And so what you have to think is, because I told you guys, I said I'm gonna make this video and I'm gonna show you guys how to actually make money in the crypto market. I'm not gonna lie. So when you look at Cardano, $1.26. Okay, so if Bitcoin goes down to 40,000, we know that probably around here to here are really good levels to look at. Now this is the absolutely macro scale of Fibonacci's and Fibonacci extensions and different levels, and this would be if this consolidation pattern completely played out, which in TA they don't always play out. It doesn't make sense for, like, if a stock was potentially to go to zero or something in a TA pattern. The exact same thing for Cardano. Yes, this is has this giant wedge right here has a target of 71 cents, but obviously that's so ridiculous that it's not going to go there because there'd be too much buying pressure unless something insane happened in the market, which is why I still have it on my charts. But looking at something like $1.25 to $1.20, that makes a lot of sense for if Cardano's prices continue to fall. So that's what I'm looking at right now. I'm looking at the cryptocurrencies that are going to be performing well, both on the upside. How much are they going to be up? $2.37 when Bitcoin was at its high. That makes a lot of sense to get involved with right now. That's almost double. And then I'm also looking at the downside. Okay, this is where I would buy if A happens, if B happens. So it doesn't matter, because what I can tell you with absolute certainty is absolutely nobody has any clue where the market is going in the short term. In the immediate short term, off of these consolidation patterns, there's no patterns right now besides potentially a double bottom, which doesn't give us any information because Bitcoin at 52,000 means absolutely nothing for any massive investor. So what we have to understand is, if no one knows whether we're going to go up or down, we basically just prepare for both situations, and we can make money on both situations, because whether Bitcoin goes to 30,000 or whether Bitcoin goes to 84 by the end of the year, 70 or whatever, we can make money either way. And so what I'm saying is that you look at the coins that you're interested in and you chart them out. You figure out, okay, well, as Bitcoin is a lead indicator, this is where potentially I'd be buying. This is potentially what my upside is. And then if you want to get in at 55, if Bitcoin holds 55, that wouldn't be a terrible idea to cost-based average in. So now, no matter what happens in the market, you have a game plan on what exactly you should do with any coin. You can insert this with any coin. It works with any coin. Same with the NFT market. When to get involved with NFTs, when not to get involved with NFTs, because regardless of the NFT market, it's still valued in XRP denominations, or Cardano or Solana or whatever NFT sector that you're getting involved with. Either way, this is what I'm looking at, is the large caps, because these make the most sense. And while the market's super sensitive right now, this is what I want to play. It are these large caps that are low risk, including Bitcoin, including Ethereum. XRP and Cardano, they're my favorite. I think they're undervalued. But right here, would I pick it up? No, I wouldn't pick it up right here. Why? I'm opening long positions to capitalize on the potential, but I'm putting my stop losses at like $1.20, because I know that's, or not $1.20, like $1.26, because I know that's potentially, okay, if we go down there, we're going to continue to go down. So I'm maximizing my upside potential while also minimizing my risk, because you want to sell off essentially, well, with longs. I'm not going to get into it, but you should only use leverage if you know what you're doing and you have and you understand the charts. But as far as NFTs, as far as metaverse, as far as crypto gaming, they've gone up so much and they've recovered so quickly that unless Bitcoin falls to 40 to 30,000, I don't want to get myself exposed to those assets because they're so volatile in nature, and also there's a lot of risk, there's a lot of reward, but the problem is the exact same thing that we're experiencing with the stock market. They're riding the Bollinger Bands, which basically, let me put up the Bollinger Bands, is basically how volatile an asset is by measurement through this technical. I took it to just be let's turn these on. Alright, so basically this is a really good indication of where the volatility of an asset is going to go, and it always stays within this Bollinger Band, and anytime it gets outside of it, it corrects. So the problem with metaverse and crypto gaming right now is they're so exponential, and the stock market is probably the best way to look at this. They're so exponential that they're riding the top of the Bollinger Bands, so there's very little room for short-term gains, and there's a lot of room for downside potential. Now, it's hard to see right here because it just had a correction, but if you go back, the stock market is constantly riding these upper bands, which means there's very little room for upside. If you buy in right here, there's very little room for upside. You can do measured moves on these, but the risk to reward ratio is just not there. You can see a perfect example of right here. You're riding the top of these Bollinger Bands, and you see these with incredibly bullish assets, and you think it's a good thing, and you're riding the wave. I particularly do not like to get involved with this because you can quickly see that we come down, touch the bottom of this Bollinger Band, come down, touch the bottom, and then we continue to ride. So like I said before, there's very little room, there's very little exponential growth potential for these assets because they continue to hit the Bollinger Bands correct and then continue to touch them, as again we're seeing right here. So you can see the same thing with metaverse, you can see the same thing with crypto gaming. And then I've already told you, as far as NFTs, that's an entire market that I'm not going to get into in this short little video. But this video, hit the thumbs up. This definitely made you money if you go on and look at any charts and apply this. So I'm glad to be back. That's the video. That's it.